India is in a very early stage of transition from 4G to 5G. So which are those two stocks that can be front runners in this transition? Which two stocks can benefit the most when India moves from 4G to 5G and then to 6G? There are some other G's as well, such as Madam G or a Behan G, but because they are beyond the scope of this video, we limit our discussion to which two stocks can be potential multi-baggers in this 5G movement. Why are they likely to benefit from this 5G transition? What are their financials looking like? What are the risks involved? And what is their future projection in terms of their stock price? So without any delay, let's begin. The first stock that can benefit from 5G space is HFCL. HFCL is the manufacturer of optical cables, optical fibers and broadband equipment for the telecom industry. Now understand this, when this transition to 5G happens, the demand for optical cables and optical fibers is going to go through the roof. Also because there is no visible alternative for these cables, because no other cable material can provide these kinds of speeds in terms of data transfer. And HFCL is a manufacturer of these kind of optical cables and fibers. So imagine the kind of overall benefit that HFCL will have when this transition happens towards 5G and also towards 6G in the years to come. In terms of the major clients that HFCL has, it has Airtel, Vodafone, Reliance Jio, MTNL, BSNL. Every major telecom player in the country is a client of HFCL. Now, if you take a look at their stock market performance, you will also see a similar trend that I am talking about. After almost 20 years of consolidation and 20 years of hibernation, the stock has finally started to deliver. In the past 1.5 to 2 years, the stock has given almost 450 to 500% returns, which you can see in their 2-year chart right now. But is HFCL really doing something in the 5G space? Are they preparing themselves to gear up when 5G transition happens? Let's find out. HFCL has been at the right place at the right time when it comes to the 5G space. They have already earmarked 200 crores to tap into the 5G business opportunity. They have established a new business vertical that will only and exclusively pursue opportunities related to the 5G business. On top of that, because they can anticipate that the demand for optical cables and fibers is going to go up, they have already ramped up their manufacturing of optical cables and fibers by 20 to 25%. Now they want to make sure that the demand is met by the exhaustive supply that they can provide by ramping up the manufacturing capacity. And the final effort taken by them is that they are also participating in the production linked incentive scheme of the government of India, in which they are going to produce all these cables in India, get benefits from the government, and they are going to make their products very, very competitive. With this, they also have an opportunity to tap across the world by expanding into new geographies, because their cost advantage is going to allow them to. If you try to visualize all these steps, all these efforts that they have taken to tap into the 5G space, you will just see that HFCL seems to be very, very well prepared for the 5G business opportunity. But apart from the 5G space, how is the overall business performing? Let's take a look at their financials, their revenue, their profit in the next segment. If you take a look at their financial performance of the past 5 years, let us first talk about their revenue growth. If you take a look at this chart, you will observe that their revenue has constantly been increasing more or less on a year-on-year basis, which just goes to show that their revenue sources are well diversified, and because this transition is going to suit them, it also paves for a very good opportunity for them in the future as well. Let's take a look at their profit chart for the past 5 years. A similar trend is observed in the profit as well, where a continuously increasing trend has been there on a year-on-year basis for the past 5 years. This just goes to show that while their top line, which is the revenue, is increasing, that is not coming in the form of additional costs. The costs are also very much under control, which is why they are also able to deliver a very healthy growth in their profit as well. Now, as a result of this, if you talk about their market share for the past 5 years, that has gone up from 21% to close to 29% in the past 5 years, which means that the other players are losing market share and HFCL is gaining market share at their expense. All of this makes for a very interesting proposition for HFCL when 5G rapidly develops in the Indian market. The current stock price is in the range of 60 to 80 rupees largely. I do believe that this stock has a potential to breach the 100 rupee mark, but this stock also comes with its own set of volatility and risks, so please be mindful of that as well. Let us now talk about the second stock, in my opinion, that is most likely to be benefited from this 5G space. The second stock is Sterlite Technologies. Sterlite Tech is a leader in deploying high capacity network solutions. If HFCL is emerging as a leader in the Indian market, Sterlite Tech boasts of a very strong global presence. It is spread across 150 countries with 580 patents under its name. That's the kind of dominance that Sterlite Tech enjoys in the global market. Let's now talk about what Sterlite Tech is doing to prepare itself for the 5G space. Now, like HFCL, Sterlite Tech has also been very quick to respond to this 5G business opportunity. It has already bagged $100 million deals in West Asia and Africa. It has collaborated with Facebook for developing 4G and 5G products. In fact, it has already developed some 5G products in the form of Garud and 5G macro radios. Like HFCL, it has also earmarked 300 crores and has kept it aside for fiber capacity extension. All these factors just proves that these two players are very well equipped to handle the transition from 4G to 5G and then to 6G as well. But as far as Sterlite Tech is concerned, let us first talk about their financials. Is the business growing on a year-on-year basis? Let's find out. If you talk about their revenue growth for the past 5 years, their growth hasn't been as good as HFCL's, but still it just shows that they are on a growth path. If you talk about their profit, that has also not expanded or not grown the way HFCL has grown, but still, given the kind of product portfolio that they currently have, given their geographical presence, I am still confident that they can still come back from here and can deliver outstanding results as far as their revenue and profit prospects are concerned. In fact, for the past 5 years, Sterlite Tech has shown a very good increase in its market share. From 15.5% 5 years back, the current market share for Sterlite Tech is close to 32%. So that just goes to show that they are rapidly expanding in this particular market. Also, it tells us that HFCL and Sterlite Tech together contribute to 60% of this entire market, which again shows that the prospects that these companies enjoy are very good in terms of the 5G transition. The stock price for Sterlite Tech is hovering in the range of 170 to 190 rupees. It has fallen sharply after the Russian-Ukraine crisis and after delivering a very bad performance in one of the quarters. But I am very confident that given the kind of background, given the kind of product portfolio, and given the kind of geographical presence that this company has, this stock price will definitely go above 200 rupees in the coming months. Alright, these were the two stocks that in my opinion are going to be the front runners as far as the 5G transition is concerned. If you like the content, subscribe to Finance Lens on YouTube or follow us on Instagram, and I'll see you the next time.